Welcome, ladies and gentlemen. My name is Chris Conway. I'm the Head of Research and Trading at Australian Stock Report. First, thanks of all for registering for this webinar, and indeed thank you for tuning in. Today I'll be speaking to you a little bit about what we've been able to achieve recently on the trading report. And of course, I guess the big question on everyone's lips is where we think the market is headed next. Then, of course, I'll hand over to our head of HC Securities, Mark Lennox, and he'll give you some valuable insights into how to really get the best out of your trading report subscription, including a discussion of short selling and the text trade service, which Mark offers through HC Securities. But before we launch into all that good stuff, let's just first take a quick look at a disclaimer here. This disclaimer basically says that this presentation is general advice in nature only, and of course that before acting you should take into account your personal circumstances. Now that that's out of the way, we'll launch straight into the recent trading report performance, and it has been quite solid, to be frank. We've broken down the recent trading performance over the last two quarters. You can see there the December quarter and the March quarter. So looking at the December quarter, we can see there the total number of trades was 54. We recorded 35 wins and 17 losses with 2 break-evens. So our strike rate, our percentage winning rate, was 65%. We've then gone on a little bit further to break down where this performance came from. So we had 24 long trades in the quarter as compared to 30 short trades. The strike rate on the winning trades was 54%, and we recorded a dollar profit. Of course, these numbers don't include fees or commissions, but a dollar profit of $3,036. Whereas our short trades, our strike rate was significantly higher at 73%, and of course, as we can see, that the dollar profit was also considerably higher as well at $11,310. So I'm not sure how well you recall the December quarter, but it was quite a volatile period in the market. We saw lots of ups and downs, and as we can see there over on the left hand side, we saw that the market opened around 52.90 and closed at 54.11 for a return of just 2.2%. So again, the conditions throughout the quarter were quite volatile, and it was such that we were able to really take advantage of the opportunities on the short side of the market. That's where the bulk majority of our return came from. We had a better strike rate, and indeed the profits that we were able to achieve off the short trades were significantly higher than what we were able to achieve on the long side. We fast forward to the March quarter, and the starting point there is what the market did for the quarter. It rallied very strongly and was up close to 9%. During this quarter, we really had a strong focus on quality rather than quantity. As we can see there, the total number of trades dropped off significantly from 54 in the previous quarter to 19 in the March quarter. We had 12 winners, 6 losses, 1 break even, and our strike rate was still up around that 65% level. It was in fact 63%. Breaking it down further, we can see there quite clearly that the majority of our trades came on the long side, which is understandable when the market rallied 9%, and indeed all of our profits came from long side trades, so that's buys rather than sells. Indeed, we in fact lost money on our short trading opportunities, obviously because there wasn't many throughout the quarter. Many quality opportunities that presented themselves, and indeed as the market was storming higher, there was no need to be taking on too many shorts other than perhaps for some portfolio balance, or indeed if there were some compelling opportunities that you know insisted upon themselves that we take those opportunities in the portfolio. So what I hope this slide really conveys, other than the fact that we've been able to achieve some good returns, is that we've been able to achieve those returns regardless of the prevailing market conditions. That's really the key factor here, and that's a product of the fact that we are able to trade on both the long side and the short side of the market in the trading report. We're not limited to simply when the market is rising, as of course a long-only portfolio would be, but we're also able to benefit when the market is moving lower through the use of short selling and sell recommendations. And that's, as I said, really the key takeaway is that regardless of the market conditions, we believe we have a strategy that we've developed that will allow us to take advantage of whatever the prevailing market conditions are. We'll be able to present to you quality opportunities in the prevailing market direction, and of course, most importantly, we'll be able to profit from those trading opportunities. We'll move along now to the next slide, where we give you some examples of some of the trades that we've presented in the report over the past 6 to 8 months. On the long side, one of our, or indeed our best trade, was a long trade on Toll Holdings. The analytical process for this trade was the same as it was for any other trade. We saw a strong technical setup. At the time, Toll was yielding, I think, over 6%, and of course it was during the period that we placed this trade when there was a strong yield hunt going on in the market. As we would all know, the yield hunt has seen the banks until recently move to record highs. It was amid that yield environment, that chase for yield environment, that we took a long position on Toll Holdings. And of course, as we were holding the position, lo and behold, there was a takeover bid lobbed for the company at around $9 or $9.05 from a Japanese consortium, Japan Post, I think it was. And of course, we got out of that trade and we recorded a very healthy 45% return on Toll. So that was the best trade that we've had over the period. On the model portfolio, I think it returned in excess of $7,000 on a $50,000 portfolio, which of course is the hypothetical portfolio amount that we use in the report. So, you know, it really was a massive return, around 14% on the portfolio for that one trade alone. So a great result, and kudos to anyone who took that trade. Another great trade that we've had, we've traded it a couple of times actually, is Select Harvests. This is an almond producer in Australia, which has really benefited from the drought in California. I think around 80% of the world's almond population comes out of California. That part of the world is going through a severe drought at the moment, and almond prices have been soaring, and of course Select Harvests has benefited from that soaring almond price. The latest trade that we took in Select Harvests returned 13.6%, so that's been another one of our better trades that we've had in the trading report. Again, the analytical process for identifying that trade was similar to all the other trades that we put in there. Again, a strong technical setup, but also a very compelling fundamental story, as I've touched on with that drought in California. And that's really what we try and do with the trading report. Obviously, we like to identify trades through technical setups, but we also like there to be compelling fundamentals driving the price action as well. And that was a perfect example of both of those analytical processes coming together with our recommendation or recommendations on Select Harvests. Look, we don't always get it right though, as our next recommendation there that we've highlighted on Commonwealth Bank proves. We bought Commonwealth Bank again amid the yield chase. I think when it was around $92, and we were anticipating a move into $100, which of course didn't eventuate. Banks didn't get much higher, or CBA didn't get much higher than around $94, I think. And we ended up exiting that trade, and we lost 3%. So again, we don't always get it right, but again, the same analytical process goes into those trades. It's quite a rigorous analytical process. We look at the technicals, and we make sure that they're supported by the fundamentals before putting them in front of you, our valued clients. You know, we don't want to put substandard or subpar analysis or recommendations in front of our client base. We'll take a look now at some of the short recommendations that we have put in the report. And again, you know, the short recommendations in the report are really a key component of the report. As we highlighted in the December quarter, so much of our outperformance of the market came from the ability to short sell, and we hope that all members are indeed able to take advantage of short selling. Mark Lennox, head of HC Securities, will talk to you in a few moments about how you can indeed take the best advantage of the short selling opportunities. You know, he's capable of guiding you through the process and helping you set up the appropriate accounts. But back to the trades, Worley Parsons was a great trade for us. We sold amid falling oil prices. Worley Parsons is a services contractor that benefits from growth in oil projects and big companies like Oil Search and Woodside taking on further projects. And of course, we sold amid falling oil prices, as I said, and as some of these projects were being shelved. So again, the technicals were pointing lower. We had bearish trends in place, and we also had, as I said, projects, global oil projects being shelved across the board. We sold. We had a great return on that, around 9.5%, which was a strong trade for us. Again, we don't always get it right though. G8 Education was one of our trades where we didn't have the desired outcome. We sold G8 Education amid concerns over the business model. There was some speculation that the business model wasn't as sound as what it has been conveyed to be in the market. We did indeed get that one wrong though. The stock rallied and we lost 12%. So look, a fairly balanced presentation there of the trades and some of the outcomes that our members have been able to achieve. But again, it comes back to two really key points and things that I've already touched on. One, it's about performing the analysis, fundamental and technical, making sure that all the boxes are ticked before we put a trading recommendation in front of our clients, and then also being able to take advantage of the short selling opportunities that are available in the report, because we know that the markets don't move up in a straight line. They move up and then they move down and they move up and then they move down. I read some interesting research not so long ago that says markets generally only trend around 30% of the time, and of course that's broken down between 15% of the time they're moving higher, 15% of the time moving lower, and for the most part, the bulk majority, around 2/3 of the time, they're moving sideways. So it's only very limited periods that you'll get by the strict definition, a trending market. And of course, if you're limited only to the long side, that's 15% of the time. So in theory, 80% of the time you should be out of the market. The trading report endeavours to take advantage of the other 15% of the time that the market is trending. Of course, that's to the downside. So that opens up a whole wealth of opportunities that we wouldn't be able to take advantage of unless, of course, we were able to short sell. Moving on to the next slide. The big question, where is the market headed? You'll allow me to have a bit of an I told you so moment here, if you will please. On April the 23rd, just before the ASX 200 made its last attempt at 6,000, reaching high around 59.80, our head of research, Chris Conway, that's me, I was quoted in the Sydney Morning Herald saying the following: it's been a stock pickers market with some of the catalysts that have been driving the market higher of late drying up. The market is likely to hover and trade sideways for a period, or potentially even move lower. We wouldn't be surprised to see a 5 to 10% correction. The link there is for anyone who wishes to see whether I actually did say that. I was quoted in the Sydney Morning Herald. That's the link there. Since touching the last peak of around 59.80 on April 28th, so about 5 days after I made that prediction, or was quoted in saying that, the ASX 200 has fallen 8.1%, and that was as of last Friday's close of 54.95. The market, in fact, made it down to around 54.50. I had been calling for the market to move into 5400. It didn't quite get there, but for the sake of the example, my call on this one was pretty much on the money. So that's what has been said. Again, that begs the question, where is the market heading next? Well, the Aussie market is a momentum market. There's no two ways about that. The market often goes on long streaks of winning and losing sessions. We've recently had a 6-session losing streak, but of course we had a big session on Wall Street recently, where the Dow Jones rallied some 250 odd points. We also saw significant increases in commodity prices, and the big question is that enough to change the momentum in the market? And given where we sit, I think yes, quite possibly it is. The index, as I said, never quite made it down to the 5400 level, which was my prediction, bottomed out at 5450. But the circa 9% sell-off from the near 6,000 high means that valuations have come back to reasonable levels, particularly for the banks. So to put it into context, the losses from the highs to the recent lows for the big four were as follows. ANZ tumbled 17%, Commonwealth was down 18%, Westpac was the worst in show at 22.5%, and NAB lost 19.4%. So they're very hefty falls there. Well, 20% is considered bear market, 10% correction, 20% bear market. So these stocks have moved into near bear market territory, and look, the valuations have come back to earth. They're at a point now that I would suggest they are reasonable. They've moved away from being overextended. The other story, of course, to take note of is that the yields are starting to look particularly compelling. NAB, for example, has a grossed up yield of around 9%. That is very, very juicy. It's very, very compelling. Put it into context, you could put your money in the bank and yield around 3% on a long-term savings account, minus inflation at 3%. That's basically 0% return you get, whereas yields on some of these blue chip stocks that people know and trust are significantly higher than that. Again, as an example, Telstra and Wesfarmers have yields of around 7.5%, 7.6%. So I think the well could very well be in. And I think the rally on Wall Street recently will act as a catalyst to coax longer-term investors back into the market as the momentum shifts. Again, remembering that the Aussie market is a momentum market. We've had a break in the momentum, and I think everyone now will start thinking about how far the banks in particular and some of the other yield plays have fallen, and the return that they can get, and how compelling that is. So we don't necessarily rush back to 6,000, but I think potentially the low is in. And as I said, I think a lot of traders and investors will come out of the woodwork and start purchasing up some of those recently beaten down stocks. So we may look to take on some more risk in the trading report. We may in fact look to be buying some banks over the coming days and weeks, and that'll be something to look out for in the trading report. Thank you so much for tuning in. Thank you so much for listening and watching the presentation. I'll now hand over to Mark Lennox, Head of HC Securities, and he'll be able to provide you some practical ideas and examples of how to best take advantage of all that you're getting in the Traders Report. Once again, thank you. Best of luck in the markets, and I'm very much looking forward to speaking to you again soon. Over to you, Mark.
Yeah, thanks, Chris, and thank you everyone for joining us. The title for our presentation is going to be How to Derive the Maximum Benefit from Your Trading Report Subscription. All of my contact details are on this slide here, so it's Mark Lennox, HC Securities. The direct number here is 03 8686 3853, so don't hesitate to give us a call if you've got any questions on anything from this presentation that doesn't make sense. So just a disclaimer as always, anything we talk about this evening is general advice only. HC Securities is a corporate authorised representative of Independent Advisor Solutions, AFSL number 314614. You can look us up on the ASIC website. As always, past performance is no indication or projection of future results. And if you are seeking personal financial advice, please get in touch with someone who offers it, because we only provide general financial advice. So who is HC Securities? HC Securities was established in 2006, so we've been around for 9 years now. We're the share advisory partner of the Australian Stock Report since 2010, serving both the trading and investment report subscribers with a range of different platforms just to execute the trades and investments from those reports. So we fill the gap between full service brokers and online trading platforms through a dedicated share advisor, just ensuring that the subscribers to the Australian Stock Report are obviously benefiting through reduced costs, good general advice contact and access to platforms that ensure they're deriving the maximum benefit from their subscription. So we currently cater to around about 3,500 retail and wholesale relationships across our 4 or 5 different platforms. Myself personally, I've been a senior private client advisor at HC for the last 2 years. I've been in the markets for the better part of 10 years now. Started out at one of the largest providers for CFDs. We're actually one of the first companies in Australia to provide advice on CFDs. Looked after a $300 million derivative book there. Also provided research and analysis to their, I think we had about 4,000 clients at our peak there. The trading report, obviously, with the Australian Stock Report, there's about 1,100 subscribers there. who generally, a broad majority of those actually deal through HC, just to ensure that they're utilising the platforms, the tools and the assistance within the group to, again, just derive the maximum benefit from their subscription. So if you do want to get in touch, we're obviously available during business hours, and the contact details are there as well. So what we're going to talk about today, how to maximise the benefit from your Australian Stock Report Trading Report subscription, the preferred platforms for executing the research from the report and why they are preferred platforms, the benefits and risks of short selling. So what is it, how does it work, and what are the risks? Typically a lot of the feedback we get from trading report subscribers is they don't understand short selling or they don't agree with it. So the point of this presentation is just to give you a bit of a reference point, just to explain exactly how it works. Again, if you've got any questions, just feel free to flick us an email, give us a call, whatever suits you. And then we're also going to talk about text to trade, which is just the facility we use for executing the trades from the report in the most efficient manner. So firstly, how to maximise the benefit from your subscription. Obviously utilising the research, choosing the right platform, and then leveraging off an advisor. So utilising the research, a lot of the subscribers we talk to simply don't log in enough to gain the maximum benefit from their report subscription. So obviously it's just a matter of logging into the website itself, which is australianstockreport.com.au. Up the top right hand side of the front page, you'll see a button there that says login. You simply log in with username and password, select the trading report in yellow on the left, click on ASX trading and then trade tracker, and then click on current positions. Now current positions will give you all the open positions on the report at the moment. Any that are pending will say pending in the entry price. Any that are filled will have a price in the entry price there, just showing you where the actual position or recommendation was filled. So obviously to derive the most benefit from your subscription, you do need to log in and utilise the research, have a read of the actual trade rationale, so why the trade was recommended, the trading parameters, so the entry price for the trade, the stop loss for the trade, along with the target for the trade, and also the full trade history, so where it was recommended to enter and exit the market. Obviously, if you do not utilise this area of the report, you are definitely not getting the maximum benefit from your subscription. So we'd advise you to log in, have a look at the trades, have a look at the trade rationale, and just get an understanding of exactly how and why these trades are being recommended, so that you can gain a bit of confidence around the strategy and system that's being implemented by our by our analyst team. So choosing the right platform. Now basically at HC we've obviously gone out and sourced what we believe are the best platforms to execute the trades from the reports. Obviously you're entitled to your own opinion on which platforms suit you as a trader and as an investor, but obviously the ones that we picked for a reason, and they're typically, for our platform anyway, the one that we've chosen for the trading report, it gives us the ability to trade all products from the one account. So we can trade shares, CFDs, FX, options and futures, all from the one account. So we could go long BHP as a stock, we can go short Westpac as a CFD, we could buy an option on copper, we can short sell the Australian dollar, or we can take a view on the ASX 200 through the futures, through the SPY, all from the one account. Now the order types that are offered on that platform. Our platform offers stop loss orders, it offers buy on stop with limit orders, and the ability to relate those orders. So some of the online platforms, some of the larger ones, their technology is not nearly as advanced as some other platforms these days, and they're quite far behind the 8 ball when it comes to order types, and they don't even offer things like stop losses or targets, and they don't offer you the ability to relate those orders. Some platforms even charge you to place stop losses and limit or target orders on your positions as well. Our platform doesn't charge you any additional fees other than the execution cost, i.e. when the trade is executed. So you really want to have a platform that enables you to follow the reports in the most efficient manner. Ability to place the orders via the platform over the phone, email or via SMS. So a lot of the platforms out there these days, typically web-based, so you can obviously access it via your internet browser from work or on your phone or wherever you are. Our preferred provider these days they've actually just recently launched a new platform that enables you to trade exactly the same account you would use on your desktop via a web-based platform, via an Android or via iPhone or on your iPad. It's all much of a muchness. It gives you the same functionality as if you were sitting at your PC at home. So range of markets offered. Obviously it's good to have the option on the platform to do things or to action ideas whenever an opportunity arises. As a lot of you know, markets can move quite quickly. So if you hear on the news, for example, that Russia's defaulted on its debt, for example, or the Chinese have defaulted on their debt, or whatever it is, you obviously want to have the ability through your platform to take advantage of that. And our platform enables you to get access to 19,000 stocks across 36 global exchanges. It's got 182 currency crosses and 9,000 CFDs. And then the last thing with the right platform is obviously the cost, so the cost of actually executing the trades. Now, leveraging off your advisor is the third point we've got here on maximising the benefit of your subscription. Obviously, HC Securities have worked with the Australian Stock Report for quite some time. So the benefit of that is obviously we know the system and the trades that are being recommended on the reports. We typically know who our clients are on a first name basis. And that just enables you, if you, for whatever reason, are out and about, or your computer turns off for whatever reason, or there's a flood, or a big storm up. We had some big storms up in North New South Wales recently. Some traders had their computers obviously flooded, and they had the ability to pick up the phone within 20 seconds, have a position placed on their account. Now, most of the leading banks, you obviously give them a call. The person on the end of the phone doesn't know who you are. You're just a number, not a name. And the effect of that is you can be on hold for up to 2 minutes to get a position actioned on your account, which 2 minutes doesn't sound like a lot of time, but when you're in a fast-moving market, that 2 minutes can make the difference between a winner and a loser, and it can make a massive difference in the percentage returns on your account over the medium to longer term. Now, the other benefit is obviously we can give you guidance and provide you with education around executing the trades on the platform to make you a self-sustained trader, and also show you how to place, amend and cancel orders on the platform. The advisor at HC comes at no extra cost to you, so it's just a part of your subscription fee essentially, apart from the execution costs on the platform, so when you buy or sell shares. Utilising text to trade to ensure you don't miss out on any trading opportunities presented via your subscription. So we've also got the text to trade service, which I'll mention in a bit more detail later. Basically what that is it just gives you the ability to say yes to trade recommendations from the report, and then we go ahead and place them into our preferred platform, which you've obviously got an account established with, and you can obviously check how things are going and keep up to date with how your account's tracking. So our preferred platform is Saxo Capital Markets. If any of you have watched the Tour de France, you might have noticed there's a gentleman who competes in that pretty much every year by the name of Alberto Contador. If you look at his jersey, it says Saxo Bank plastered all over the front of his jersey. Saxo Bank have been around for, I believe, the better part of 25 years now. They've got around about $4 billion of client funds under management. They're not a small firm by any stretch of the imagination. They've got 90 partners globally now. The real benefit of their platform is the multi-asset trading functionality. So, as I mentioned earlier, we can trade FX futures, FX futures, CFDs, equities, and options all from the one account. And the main benefit for you as a trading report subscriber is they have the order types which we offer on the report. So, buy on stop orders, buy on stop with a related limit order, stop loss and trailing stop orders, and also related orders with other cancels other. So you can enter a position. Let's say you've got BHP and you want to put a stop and a target on that position. You can place that automatically into the system, and then one or either leg of that trade is executed, i.e. your target is met at, say you bought BHP at 35 and you put a target at 40 and you put a stop at 30. If the target is met at 40, then the stop at 30 is automatically cancelled for you. A lot of platforms don't offer that functionality, but that is one thing that is very important if you're working full-time and still wanting to take advantage of your subscription. Now, the most important benefit of this platform is we've obviously got access to your account as well. So you've got the ability to contact us to close out positions. You've got the ability to execute trades and place orders via email, phone, SMS. and it just allows you to obviously get the maximum benefit from your subscription. So if you want to register for a demo, I've just put the link there. It's just on our website, hcsecurities.com.au/saxo-registration. You can plug in your details there. It lasts for a month. If you would like a complimentary walkthrough of the system itself, just feel free to get in touch and we can walk you through that platform in a bit more detail. So as I mentioned earlier, a lot of the feedback we get from clients is they do not understand what short selling is and how short selling works. So short selling is just the practice of selling an asset that you don't actually own in the hope that the share price will decline and you can buy it back in the future at a lower level. You keep the difference between the price at which you sold the asset and the lower price you paid to buy them back. So why would you short sell? Typically it's to speculate on a particular market's value declining due to economic events or published financial problems which can lead to a decline in the value of the company. So typically short sellers are very active within equities, they're very active within currencies, they're pretty active across the broader spread of the market, but they typically make up about 5 to 15% of a share registry if they have a very bearish view on the company. So that 5 to 15%, whilst it can, some would argue, would have a direct impact on the performance of the share price and therefore the performance of the business. Typically, it's not actually a reflection, the short selling, of what's happening with that underlying business or commodity or currency or whatever it is. I'll give you a perfect example, Fortescue, which has been a fairly heavily shorted stock the last 12 months. Now the reason it's been short sold is because people in the market have the view that the iron ore price is going lower, which is obviously the commodity that Fortescue sell, and if the price of that commodity is falling, then people are going to take the view that the company isn't going to be as profitable. So it presents an opportunity to short sell or profit from the share price falling. Now the way to do that, you've got to have that underlying view of what's going to happen with a company, such as Fortescue, such as the recent sell-off we've seen in the banks. All of that volatility is opportunity. It's about how you look at it. But I can tell you right now, if you do not have short selling as part of your arsenal within your broader portfolio, you are going to miss out on a lot of opportunity, particularly within our trading report. Almost 70% of our profitability from the trading report in the December quarter was derived from short selling, and that was mainly because some of the volatility we saw within the oil space. So I don't know if many of you remember back in late 2014 we had a pretty large correction in the price of oil, and that flowed through to our domestic oil producers because obviously the price of that commodity was falling. That's the price of the commodity they used to sell their product, so therefore their product was generating a lower profit margin, and the business subsequently, you would expect, would experience lower profitability, which led to a decline in the share price. So all of that volatility really is opportunity. It's about how you look at it, and the only way to take advantage of it is to have a platform and a system in place where you can take advantage of it. So the Saxo platform gives us that ability to short sell. There's a list of the stocks within the platform that it'll tell you can short sell, and if you've got any queries as to how to short sell or or how to place those orders on the platform, just feel free to get in touch with us again. So what are the benefits? We've just gone through them. Obviously you profit if the market is falling and you've taken the correct short position at the right time. What are the risks? So basically, theoretically, there's unlimited risk. Now what do they mean by unlimited risk? Basically, if you short something at say $1, then theoretically that stock can go to infinity. So you've got unlimited risk. Now obviously, as anyone who's been in the market for any sustainable period of time knows, a lot of stocks don't go from 0 to infinity. They obviously fluctuate a lot in between, and you can manage that risk through what we call a stop loss. So you can cap your losses on your positions by running stop losses. So what is a stop loss? Let's say we shorted BHP at $30 and we placed the stop at 35. Our risk on that trade is the $5, which is the difference between the shorting at 30 and the stop at 35. So let's say BHP's share price rose from 30 to 35. We've obviously taken a loss of $5 because we're taking the view, being short, that BHP is going to fall in value. So the stop, basically you'd sell at 30, you put an automatic stop in the Saxo platform at 35. If the stock rallied from 30 to 35, the system will automatically close you out, and you'd have a realised loss of $5 multiplied by the quantity that you short sold. So let's say you short sold 1,000 units and it rallied $5, you'd obviously be down $5,000. Similarly, if the share price fell, so your view is correct, you've gone short at $30 and it falls to 25, you've made $5. So on 1,000 units, that'd be a $5,000 profit. But all the product disclosure statements always have to paint the picture of the worst case scenario, and the worst case scenario is obviously that your share price, your share CFD you've shorted goes from a dollar to infinity without you doing anything in between. So obviously with the recommendations on our report when we're short selling or when we're going long, we always have a stop and a target. So we always know what our risk is on that position. And typically the general advice on the portfolio within the report, it'll be a 2% risk based on the account size. So if you had a $50,000 account size risking 2% per trade, that's a risk amount of $1,000, and that would be the difference between BHP at $30 and BHP at $35 if you were short. So here are some examples like we've just gone through. So let's say we're taking the view that BHP is going to report negative earnings and we expect the price to fall from $20 to $19. So we basically look at shorting or taking out a short position on BHP at $20 for a total of $20,000, and the share price subsequently fell to $19 and we buy them back at $19 for a total position size of $19,000. So obviously the shares in the background, they're returned to the lender who accepts the return for the same amount of shares as they lent, irrespective of the fact that the market value of the shares is decreased. So when you take that short position, the lender will lend you the stock. So they've lent you 1,000 shares of BHP at $20 and you've got a short position, so you're anticipating the share price to fall. The share price has fallen to $19, you've bought them back and you retain the $1,000 difference minus the borrowing fees and commissions between the price at which you sold the borrowed shares and the lower price at which you bought them back. So the share price has fallen from 20 to 19, you've made $1 on 1,000 units, which is $1,000 not including costs. Example of a trade that makes a loss, let's say we short sold 1,000 BHP at $20 for a total of $20,000. They reported positive earnings and the share price rose to 21. You can now buy the 1,000 shares of BHP back for 21,000. So you're returning the shares that you borrowed at $20 at 21. They've accepted the return of the number of shares that they've lent you, irrespective of the fact that the market value of the shares has decreased. And you've made a loss of $1,000, which is the difference, excluding borrowing fees and commissions, between the price at which you sold the borrowed shares and the higher price at which you bought them back. So you've sold them short at $20, expecting the share price to fall. It hasn't fallen, it's rallied, and the effect of that is obviously you've made a loss of $1. So I just want to give an example of a short sale from the report. Obviously you can log into the Australian Stock Report, Trading Report, go to this section of the report called Trade Tracker and have a look at all those positions there. A good exercise if you are just getting involved in short selling is to actually click on, up the very top, you can click on Sell, and it'll sort them by all the short positions. So you can go and have a look through all of the charts and the trade rationale behind why those positions were taken short and why we had a negative view on the underlying company. So this is GEM, which is G8 Education. Some of you might be familiar with. Basically, the green and the red line there indicate that the stock is in a shorter term downtrend. Now this is a short position we recommended on the trading report back in late November. So the general advice was to sell 5,000 GEM at $4.55. So you can see where that little red line meets the candle there at $4.60. That candle where the red line meets the candle is the day we actually short sold at $4.55 a share. And then the green line where it says profit target met was our initial target price of $4.20. Okay, so basically our analysts back in late November took the view that GEM was overvalued and likely to depreciate its share price, and they subsequently recommended a short sale or a short position in GEM. So we sold it initially at $4.55 and profit target was met probably it would have been about 2.5 weeks later at $4.20. So this was a successful trade. So we sold it, the share price has fallen, we bought them back, and we realised a profit on that position. So again, if you want to see this, it's all available to you as a subscriber on your Australian Stock Report website. You can go to closed trades, go back to November of last year, and just have a look through the recommendations that are current till then. So we just want to go through text to trade. So text to trade is an extension of the current SMS sent via the Australian Stock Report that allows you to reply yes and have the trades recommended by the Traders Report placed into your Saxo account with your approval. Okay, so basically HC Securities only provide general advice only. So basically what that means is you have to have the ultimate say on what you do or don't do on your account. It's entirely your money and it's entirely your decision. Now obviously the reason you would have come on board as a Trading Report subscriber is to take advantage of some of the recommendations made on the report and to obviously utilise the report in the most efficient manner. Now the only way to do that is to obviously place some of the recommendations into your trading account. And text to trade is just a great way if you are too busy running around to do that. So basically what it is, you'd already, as subscribers, I'd no doubt be receiving the text alerts from the Australian Stock Report. So those text alerts are just making you aware of opportunities that are being recommended by our analysts during live market hours. Obviously, trades are recommended outside of market hours, typically between 9 and 10 in the morning. So basically what text to trade is it's an extension of the Australian Stock Report text in that it allows you to respond yes to the trade signal that is generated from the report and have that trade automatically placed into your Saxo Markets trading account for you. So how does that work? The first step is obviously to have an open funded account with HC Securities through Saxo. We then put you on our SMS distribution list. And basically within that distribution list, it's set by the account size. So let's say you came on board with $50,000 initially to start with, and you're risking 2% of your capital per trade, or $1,000. You'd obviously go onto the list that is risking $1,000 per trade. So the quantities would reflect what is reflected on the Australian Stock Report trading report. You simply reply yes to the text that's sent to you, and that trade is automatically passed through into your Saxo account for you. As you can see, the text come through similar to the example on the slide there. ASR buying 250 NAV at market up to 32.45. Target 45, stop 30.45, risking $500. Reply yes to take the trade with the stop and the target. So when you reply yes, we get that as an email. Now the email will say your account number. It'll obviously have your risk amount, which is the $500. It'll have the quantity that you're buying. So in this example, it's 250 units. Basically, you respond yes. We then go ahead and place that order for 250 NAV at market up to 32.45, along with a related target of 45 and a stop at 30.45. So that's all automatically placed into your trading account. You can access your account 24/7 via a range of different methods. Onlinewebconnect.com is a great way to access your account if you're just at work and you just want to see how things are going. You've also got the ability on your iPhone or Android to keep up to date with your account. There's also the Saxo Trader and the Web Trader if you've got a standalone desktop platform or you want to access the actual trading account at work. Web Trader will work for you as well. So the main benefit of this service just frees up your time. You no longer need to log into the report each morning between 9 and 10 to view the suggested trades, calculate how many to buy or sell, how much you're willing to risk, load your trading account, and then place the trade yourself. We basically do all that hard work for you, and ultimately it just ensures that you're getting the maximum benefit out of your report, which again, the only way you're going to do that is by actually placing some trades from the report. So if you've got any questions regarding text to trade or you want some more information, just feel free to get in touch with me. My details are contained on this slide. So the direct number is just 03 8686 3853. Alternatively, you can email me. It's just mlennox@hcsecurities.com.au. But hopefully this presentation has given you a bit of an idea of how you can maximise your current subscription, the benefits of short selling, and also the benefits of our text to trade service. I think combining all those things together, is you've got a very powerful tool there It's just a matter of actually getting in and getting involved. So again, if you've got absolutely any questions regarding short selling, any queries, any questions regarding the platform, or you just want a bit of a hand navigating the trading report, we're here to help, so just feel free to get in touch. But thanks for listening.